In this video for the FXTM educational series, we're going to be taking a look at technical analysis. We're going to focus on trend, why it's important, how it affects the kinds of trades that you're looking for, charting methodology like bar charts and candlestick charts, why one may work better than others in certain circumstances, and then finally we'll take a look at technical indicators and introduce you to that concept and how that can help us to identify good opportunities in the future. So let's start our discussion out by talking about trend, which is really basic and yet can be a concept that trips up traders from time to time. Now, in its simplest form, the trend either is a positive trend or it's a negative trend. And the way we define it is merely as a series of higher highs and higher lows in the case of a bullish trend. So you can see here my simplified diagram. I've got higher highs and higher lows. That's exactly what I'm looking for. And in a bearish trend, just the opposite. Lower lows and lower highs. So I got my lower highs there. I have my lower lows right there. Now, a line chart, which is really what I just did here, this is actually a common way to display charts. And you'll see this on television and other financial periodicals and so forth, because you can show a lot of information without crowding the chart too much. Now, we're going to take a look at an example of a classic uptrend and a classic downtrend in a second, and then we'll come back and we'll talk about, well, when might we want to add a little bit more detail to our charts by looking at bars versus candles. Now here you can see a pretty good example of a bullish trend on the dollar yen from July 2014 through December 2014. A nice smooth trend, higher highs and higher lows from about 101 to 122 versus the dollar. Now this next one is a good example of a nice bearish trend, a series of lower highs and lower lows. This is on the euro dollar from April 2014 through March of 2015, where the market dropped from about $1.4 to the euro to $1.04 to the euro. So a pretty strong move to the downside. Now, as I mentioned, sometimes the trend can be a lot more ambiguous and sometimes it's just flat. So here's a good example. Through most of 2015, the dollar yen has been roughly in a flat trend without a really discernible pattern of higher highs and higher lows or lower highs and lower lows within a trading range of about 126.50 to 119. We're going to discuss more about dealing with some of these more ambiguous trends later in the video. All right, now before we can start digging into some of the more complex issues around trends that aren't so smooth, an even series of higher highs and higher lows or lower highs and lower lows, let's start talking about how we add a little bit of detail to our charts. And we're going to start with bars versus candles. Now, bars is a traditional Western charting methodology where the day's high and the day's low is represented by this vertical bar, just like this. Now, the day's open is represented by a little tick mark on the bar on the left-hand side, and the day's close is represented by a little tick mark here on the right-hand side of the bar. Now, in this case, as you can see, just by glancing at the bar, you know what was going on during the day. You don't just have a single point for the close price like you would with a line chart. So here I know that the close was above the open, so I know that overall it was a bullish day, and I also know where the close or the open was relative to its highs and lows. So that gives me a lot of information at a simple glance. Now, candlestick charting, and every trader is a little bit different on this as to what kind of charting methodology they prefer, but candlestick charting is a methodology that came from Japan and has really become very popular over the last couple of decades. Now, it's similar in the way that it displays information, but the look and feel is just slightly different. So this, what I've just drawn here, that's the body of a candle. So the fat part of a candle, and we'll say that this is also the open, and that's the close price. So that's telling me the open price was down here, the close price was up there, so it was actually a positive day. Now the candle also has vertical lines that will represent the high price for the day and the low price for the day, assuming that those were different than the open and the close. So in other words, that the low wasn't equal to its open for the day. Now candles, they also go another step further in that traditionally a hollow candle like this, so one that is white, represents a positive day in the market. where the close is above the open. But what if that was just the reverse? What if we had the close down below here and the open was up towards the high for the day, so it was actually a negative day? Well, traditionally, candles, if they are filled in solid black here, that actually represents a situation where the high was in fact, or the open was in fact above the close. And these days, with charting methods and charting options that you have available, for example, from FXTM's MT4 platform, you've got a color-coded candle where if it's filled in red, then that means it was a negative day. If it was filled in green, that means it was a positive day. And you can make a lot of decisions as to how your chart is plotted so that you get the most information that really accommodates the way that you're trading. But this is traditionally how we would chart either a bar chart or a candlestick chart, whether we color code them or not. Now, as I mentioned, the trend can sometimes be a little confusing, especially when you don't have an even series of highs and lows to rely on, and not even bars or candlesticks can necessarily help us to answer that question. But technical indicators can actually do a really good job of not only helping us to identify what the trend is when it's a lot more ambiguous, but also to build rules around to decide when we're drawing a line in the sand as to when a bullish trend ends or a bearish trend begins and so forth. Now, technical indicators tend to fall into basically two different categories. Now, here I've drawn a couple of lines crisscrossing each other. These are moving averages, which fall into the category of overlays. So a technical indicator that is an overlay, it literally sits on top of the price. So a moving average, simply would be a simple moving average, which is just a plot pointed every day based on the average close price over a look back period. So we're going to look at that here very closely in just a second. Now, the other form of a technical indicator, and we might just call these indicators in general, the most common type are oscillators, and indicators like this usually sit below the price chart, or sometimes you'll place them on top of above the price chart. They are a study of price over time, like a moving average is, or like price bands are, but they are more specialized. So, for example, some moving averages may only look at the open price or the close price, or maybe an average of the open, high, low, and close for the day, and then they'll average that over a look-back period. While indicators may look at the relationship between the open or the close price relative to the high or the low over time. And therefore, they can give us a little bit of additional insight into what's really going on with the trend. Is it strong? Is it relatively weak? Is it likely to change? And there's a lot of additional information that we can get by using a technical indicator. Now, some technical indicators will use other information besides just the price over time, such as volume, for example. But we're going to look at one that's a common one. We've got a lot of great historical work based on it, called the MACD, in an example as to how can the MACD and overlays, how can they help us to draw a line as to when is the trend really changing and how strong or weak is it? What kinds of trading opportunities should we be looking for? So we looked at a trend segment on the dollar yen earlier where it was nice and bullish in 2014. And then through 2015, it got a lot more flat. It was more difficult to tell which direction the market was going. And a very common strategy for investors to use just to provide a general overview of whether or not they believe the market that they're following is in an uptrend or a downtrend is to use a moving average crossover. So a common setup for this would be a 200 and a 50 period simple moving average. So using both a 200 period simple moving average and a 50 period simple moving average applied together. Now, as these crisscross each other, so as the faster moving average crosses above the slower moving average, they would look at that as a line in the sand, if you will, for where the market has become bullish. So you can see that here, for example, in September of 2014 on the dollar-yen pair. Then finally, in October of 2015, the fast moving average, the 50 period moving average, crossed below the 200 period moving average, or the slower one, on the 16th. So we would look at that as a benchmark signal that that bullish trend is now over. So the trend had gone flat for a while and now is really starting to degrade. And this is one of those ways to create an unambiguous signal, one direction or the other. It's either bearish or it's bullish. Now, obviously, we wouldn't want to use this all by itself, but this can help us to address the general trend in the market, especially when it's a little bit more difficult to tell. And in fact, what a lot of investors will do is that they will then apply a regular technical indicator with their overlays. So the MACD technical indicator can do a lot to supplement our analysis once we're using an overlay like our two moving averages here to decide whether or not the market is in a bullish or a bearish trend. Now the MACD is in and of itself actually a comparison between two different moving averages. Now you don't need to remember that. What you need to know, however, is that the MACD line itself, which you can see here, is a measure of bullish or bearish momentum. So if it's trending higher, then that's telling us that the bulls are beginning to take control of the market and we've got some bullish momentum behind the recent price moves. In the same way, if we get a declining MACD line, then that's telling us something about momentum behind the bears. So bearish traders or shorts are making some progress in the market. Now the MACD line itself also uses a crossover system. So the MACD line is smooth with a 9-period moving average. And when the MACD line crosses above that, what we call the signal line or its own moving average, we look at that as a nominally bullish signal. And if it crosses below its signal line or its own moving average, then we would look at that as nominally somewhat bearish. Now what's really important here, and there is still much to learn about the MACD and other technical indicators, is that they're going to be most predictive or most valuable when they give us a signal in favor of the prevailing trend. So if we already know that the market is in an uptrend, however we've defined that, so let's say for example here on the dollar-yen pair, we've defined that as any time when the 50-period moving average is above the 200-period moving average, then we're in a bullish market. Therefore, we're very interested in any positive crosses on the MACD as a signal that bullish momentum is beginning to accelerate, and that would be considered a risk-on signal. So you can see an example of that here. In the same way, if we were in a bearish trend, so whether we had defined that with our two moving averages again, with the 50-period simple moving average being below the 200-period moving average, and then the MACD crossed below its own moving average or its signal line, we would look at that as a bearish signal for the market. A trader who observed that may evaluate adding risk to the downside, so they would be opening a short position on the pair that they're monitoring. Now we've really just scratched the surface here in this FXTM educational video on technical analysis as to what can you really do with all of these tools at your disposal in your MT4 platform. In later videos in this series, we're going to take a closer look at some of the trading methods that we can use precisely to identify entry and exit signals using bars, candlesticks, and technical indicators, including the MACD.